Hello, this is Dr. Paul Cottrell. I'm recording this on July 11th. I'm going to be talking about artificial intelligence and how it may be affecting the markets. But it's important to understand what are some of the risks that are involved. There are two main scenarios that people have been talking about. One scenario, which the hyperscalers have been pushing and some of the media has been pushing, is this idea that the economy will turn into this artificial intelligence economy. Many companies are going to be needing compute and running queries and running this agentic AI for their business processes. They'll be paying tokens and the economy will move forward. Some people will be displaced, but companies will become more profitable. That's the story. Right? But ones that critique that story, assuming that it does take place, would say, well, you're destroying aggregate demand because you're laying off workers and it's going to cause an effect on the economy. All right. And I fall in that camp. If the token is, if companies really go hog wild with the tokenization and updating their processes and businesses, then you're going to see displacement of workers. The other side of this, or other potential path, is there's too much of a build out of compute, and that the compute that has been built is being used up by two or three major companies, and that if something falters with those companies, there's going to be an awful lot of compute on hand that can't be repurposed. Unlike when the internet bubble happened, there was a lot of fiber optic cable that was laid. People started to be acclimated in using the internet, and that infrastructure is the infrastructure that we use today. How much of if things start to fail, how much of this infrastructure can actually be repurposed? Okay, that's one point. Another aspect to this is the business model. Like Anthropic and AI decided to pull their IPO. Well, it's probably because one, there's not liquidity to absorb all these IPOs since SpaceX. And two, their business model is failing. Why? It costs a lot to build the actual LLM model and the cost to inference off of it. Now, when you're training a model, you're feeding in data, and there's lots of computations that are taking place, billions, if not trillions, of nodes with these neural networks. And it costs a lot to build that model. And to run inference off the model also costs money. Now, what are some of the costs to build that? The cost of the chips, the energy, the facilities, the post-training and curating of the model. That takes money. Now, on the revenue side, for AI, OpenAI or Anthropic, the revenue side is, okay, at the household level, there's free access to certain tools. Most people that use OpenAI or ChatGPT, they're using the free version, so there's no revenue for there. And there are some individuals at the personal level or at the company-wide level where they are maybe paying the 200 or the low subscription rate. And then there are the enterprise versions where you are plugging into some sort of API, or you have some more features that are more at the enterprise level. People are noticing that companies are pulling back on tokenization because it's way too expensive. So business model for OpenAI and Anthropic and some of these other AI players is all about the idea of having a subscription model where you're accessing their AI, their frontier model or their inference model, and you build your processes in your personal life or at the corporate level, and you have to access them. Now, one tangential problem is that they have access to your processes. They know what you're doing. So they have a view of your intellectual property. That's one problem. That's the reason why everyone wants to go local, not on some sort of server. People can't do local right now because of the cost of the computers, and to build out a center for local operations is cost prohibitive. So a company just accesses someone else's model and computation space availability instead of having GM have their own. For example, GM has a lot of data. Maybe they could create processes within their company to help with their engineering. It's not cost effective for them to build their own model. So they will just piggyback off of a frontier model, let's say OpenAI, ChatGPT, and they build these processes. It's not very cost effective for them to build this huge data center. So they contract out space at a data center. So it's not cost effective yet, maybe never, to do it locally at a company. So they have to go to OpenAI or Anthropic, get data space, and crunch. And then GM starts to realize this is not cost effective for them. This is not the cost of the tokens each time that you're accessing it is just way too high. So there's going to be pressure to push down the price for revenues. That's one issue. The other issue is your API actually secure? It's not actually. Not API, the connection, your API connection, is it secure in the sense of what you're developing? They know your IP. So you have intellectual property problems. You have the high cost of the tokenization. It's too costly to do it locally at a corporation. And so what happens is that when you're looking at OpenAI or Anthropic, their revenues are somewhat capped. One, the need to do these high computational problems or high computation access is really not there at the individual corporation level. There's not going to be a lot of gain. Many companies are going to say, maybe we get a little bit of gain by doing this, but it's not really worth it. The tokens are too expensive. Even if you lower the token price, it's not that beneficial for us. We get very marginal gains. That's where everybody is at right now. So Anthropic and OpenAI are looking at, well, revenues are going to be down because corporations aren't willing to pay for those tokens because the marginal gain that they're seeing with AI in their corporate process, that gain is less than the actual cost to actually access these servers all the time, because every time you're running an agent, it's using a token. So OpenAI and Anthropic is just an annuity. You're paying them for your company to do processes and think. That's what's happening. Okay, so we have this issue. Revenues are a problem for OpenAI and Anthropic. Just with the idea of people willing to pay. Homes, their cash is focused on housing and food. They don't have money to give to OpenAI. Corporations are playing around with this, but are realizing the tokenization is too expensive. And the marginal gains that they get at the corporate level, it doesn't make much sense from a business perspective. You may save $10,000 or even $50,000, but yet you're paying $100,000 in tokens to get there. It's not worth it. So OpenAI and Anthropic, they're going to see demand go down with individuals willing to pay for the use of the service. Now, even if they had many companies willing to pay an enterprise fee, and have these tokens at different tier levels or whatever, let's say they did have that. Even if corporations were paying, the business model is such that for Anthropic to run the query in their LLM or inference model, the cost to run it versus the actual charge that they are to the customer is upside down, meaning the cost to run the model from Anthropic's or OpenAI's perspective is, let's say, 10 times more than the actual revenue. So they're 10 to 1 underwater. So for every dollar that they're getting, they're spending $10. Now, a big part of this is that you have Anthropic that has all this built up this model. It costs to build up the model. So that's an R&D sunken cost. And the idea is that over so many years, you chip away at the development costs of that. So their product is the LLM, and they're going to charge people to have access to it. But they have to have a contract to run servers. So there are these server farms that these companies are designed to just run servers. Now, who runs the servers? Well, there are corporations like Blackstone or BlackRock. I always get the two wrong, mixed up. I think it's Blackstone that have deals where they build up the infrastructure. They have the plant or the facility, the power hookup, and a company comes in to that facility, has a lease with Blackstone, and what will happen is they're paying their lease and they build out these servers, and they're going to rent out space on these servers to places like OpenAI or Anthropic. So they are going to charge the use of these servers. Anthropic gets a bill to run the model because it's very inefficient to run the model. Think about it. Your brain can work and do lots of computation by eating a sandwich. But to do the same level of computation, it takes way more energy for these servers. So it's not energy efficient. So that's one part of it. Plus the cost of the chips and the number of nodes that you have to build out is so cost prohibitive. So you have these hyperscalers, you have these companies that are selling space on their servers to do computation. And some of these companies, like Anthropic and OpenAI are buying huge amounts of space from these server companies. Okay, so you have a lot of the computational purchasing coming from OpenAI and Anthropic. If Anthropic and OpenAI don't have a good revenue stream, they can't afford to pay the server farm to continually to run. So this business model doesn't make sense. They would have to raise the prices 10 times to be able to break even. What customer with ChatGPT, with OpenAI, or which customer with Anthropic would be able to absorb 10x bill? Nobody. And if people are pulling back on tokenization because of the cost, even the smaller companies, which is most of America, are going to say it's not cost effective and we're not going to do this. So the business model doesn't make sense. OpenAI doesn't get enough revenue for the cost to run the model, let alone to be able to recoup the cost to build the frontier model. So you have maintenance run, the query run, and the building of the model are two different costs here for OpenAI. They had to sink in their cost to make the frontier model, and then continuous accessing it will cost money. You're sending a query to OpenAI. OpenAI sends it to the server. It's crunching the cost, and then it sends the answer back to you. The cost that you are paying OpenAI is, let's say, $1. The cost for the actual query going to OpenAI, OpenAI sending it to the server, and the server coming back to OpenAI and then sending it back to you, that cost plus the cost to make the LLM is about $10. So you have a 10-to-1 ratio here. This issue, now I'm using this as an example. I don't know the exact ratio, but it's of this kind of magnitude. It may be even worse than what I'm saying. But the point here is that it's like a 10-to-1, 20-to-1 type issue here. Every dollar coming in for revenue, $10 are going out. So it's not sustainable. They can't get enough, they won't be able to get corporations to pay for the higher tokenization. So the rumor is that OpenAI will postpone their IPO until next year. Anthropic was planned to do their IPO this year. But Anthropic has the same kind of problems that OpenAI does. But Anthropic is getting a lot of notoriety with the Claude and coding world and all this. But even if you do get big customers accessing Anthropic or accessing OpenAI, they still can't float the boat for Anthropic and OpenAI because they're not generating enough revenue because of this 10-to-1 problem they have, or 20-to-1 problem. So when they fail, which it looks like they will, I'm not sure who will fail first, but it looks like OpenAI will. When they fail, then all this space that they have commandeered to run on the servers will be open. Now remember what I said. The servers are really focused on just querying. There's not a very good reuse case. So they end up becoming garbage. Now, the perception right now that we have is that there's not enough server space, so we have to build out. The reason being, these hyperscalers, these models, they use up so much computation, and OpenAI, Anthropic, Palantir, Meta, all these companies, Oracle, they're Microsoft, NVIDIA, whatever. They need all this space. They need all the computation. There's not enough computation. But if one of these hyperscalers, if one of these Mag 7 start to falter, let's say Meta or OpenAI, then you no longer need all that space because they've commandeered so much of the computational total. Most of the computation that has been commandeered is concentrated in just a few companies. If those companies' business model is such that they no longer, if they're going to start pulling back on it, they will start pulling back on leases. So how is this going to affect the economy? Let's assume that there will be some sort of pullback by these companies because of the economic model doesn't justify, this business model doesn't justify further build out. So what's going to happen is that investors, let's go back even, let's not go back that far yet. The company is going to start showing that they're not profitable and they can't pay their debt. A lot of this is debt driven. They can't pay their debts, so they're going to start defaulting on their loans. They're going to start defaulting on the leases. That's going to affect places like companies that actually have the servers running the actual computation. They're not getting paid by OpenAI anymore. So let's say OpenAI says they can't get any more debt, they can't issue an IPO, so they can't get any money from the equity market, and therefore they start pulling back. They don't pay on their lease. The server company loses money, has to close down. That affects Blackstone. Their leasee can't pay them. The ones that bought the debt from let's say the server company bought into a private equity fund with Blackstone, and those investors that borrowed debt from, or I should say, the investors that bought the debt from OpenAI and gave them money so they can build their company, they're going to be not paid because OpenAI can't pay them. So there's going to be a whole debt market, private equity, and the private debt market is going to suffer. And the circular financing issue with NVIDIA and OpenAI with Oracle, and Oracle with other companies. Oracle's already showing signs that they're having problems. They had to issue a lot of debt. The build out of these servers are very expensive. The revenue isn't there. So there's 10 to 1, 20 to 1 flip-flop, where for every dollar of revenues coming in, you're spending 20 or 10. It's not a sustainable model. And all this compute that's being commandeered it's concentrated on just a few companies. If one of them falls, and because there's circular financing, others will fall within their little circle. And all of a sudden, there is a mass wave of compute that is not needed. So the perception right now is that we're constrained with compute. But that's only because of companies that are buying into the compute, but their business model isn't sustainable. And once they fail, there's going to be a deluge of open compute out there. And then all of a sudden, the memory chips will start to, right now, memory is high. And all of a sudden, the memory chips will start to fall because there's going to be no need for these to build out further. And other contracts, while they're building facilities, they'll go be canceled. So there's these two tracks. There's this track of this is really going to take off, and corporations are going to start making their processes such that they are dependent on Anthropic and OpenAI. There's going to be tons of revenue, and people will get laid off, and then I think demand destruction will happen in the economy, and then we're going to have a problem. But this other scenario where actually the server farms are going to fail because of these large companies like OpenAI and Anthropic don't have sustainable business models. And what will happen is now they're going to fail. There's going to be a lot of compute out there. Tokenization price will radically go down. Now, investors are going to be hurt by this. Now, I did some studies on this. Before I go into the details of this, I'm just going to pivot to a commercial here. But it's important to really pay attention to this emergence of OpenAI and Anthropic potentially failing. One of the signs of this emergent behavior is Meta starting to sell compute, what they call, they have overcapacity. So they're selling compute. You have these servers that are getting all these contracts from these companies that are not sustainable. The smaller guy doesn't really need the compute. It's the big guys like OpenAI and Anthropic. So little companies like Joe Blow's, car wash, they don't need it. So there's such a disparity between the high-end user like Anthropic needing those server farms versus the average corporation. And there's just not enough of these average corporations. Maybe $1 billion worth of revenue, maybe $2 billion worth of revenue. Even if it was $5 billion worth of revenue for the small corporation, small fry type enterprise. Even if it's $5 billion, it doesn't justify hundreds of billions of dollars worth of building server farms. So even if it's $5 billion a year, and it's probably not for the low guy, for the low end user, it would take decades to pay off. And these chips become obsolete within 3 years or less. And there's a drop-off rate when these server farms are running. There's a 5 to 10% drop-off where the chip burns out. It doesn't last for 3 years. There's a burnout rate. So there's like a 5 to 10% burnout rate of the chip that has to be replaced, plus the obsolescence of the chip. So there's not this model. The point I'm making is this model isn't sustainable. The other issue is Oracle. Oracle has been downgraded for their credit rating, one rating above junk, and they're showing losses because of this big build out. I personally think they built out too fast, and the business model was you were going to lay off your workers, and you were going to basically tokenize your worker, And OpenAI and Anthropic, we're going to make the money on it. And you would maybe save $50,000 for every employee that you tokenized. And you got rid of the individual and you tokenized your employee. You've created an AI agent. Every time you access that AI agent, you're paying Sam Altman a certain amount of money every year. But the reality of the situation is hard to do, and you're not in control of your IP. And even if you do that, it's not sustainable because there's not enough revenue out there to actually pay for the computing power because it's very inefficient. So most likely this is going to crash. So the two canaries in the coal mine here. Oracle, well, three. Oracle's situation, Meta stating that they built out a compute, they don't need as much, and now they're going to sell it on the market. Well, that means that they're competing with some of these smaller companies, the smaller level companies that are building up these server farms. This is a sign that they don't need as much compute, because you would think that Meta would need all the compute they can get. They couldn't get enough, or Google or whatever. Well, it's starting to show that maybe we did do a too much build out, and this perception that there's not enough compute out there is just false. And the marginal customer out there isn't going to be able to sustain the industry, the AI industry, and this whole compute issue is sustained by just a few companies. And if one of them falls or two of them fall, the whole thing goes. You don't need it because it's not a sustainable model. There's not a sustainable demand. It's not just a sustainable business model. There's not a sustainable demand for it. It's very similar to virtual reality. It's kind of a cool concept, and all that, but it never took off. Now there's some human behavior reasons why people don't want the headset on their head all the time. It looks too futuristic and antisocial. There's just not a sustainable demand. Kind of cool technology. It's costly. These headsets are costly to make. And because there's not a sustainable demand, it's failing. Same thing here. But it's even worse. It's even more pernicious. To run the models is like a 10-to-1 ratio. For every dollar you're getting, it's costing you 10. And until that is solved, this is not going to work. And no one has a solution for this. Okay, let me do a commercial, and then we're going to go into the details of how it's going to affect the market at the macro level. Please go to my store, the-studio-reykjavik.com, and help support the work that I do. All these videos I do are for free. I give you kind of a unique perspective. I do these daily shows where I show you what I'm doing in the market and playing the news and giving you my perspective on the news. So please help support the work. All these videos are for free, and get the great supplements that I have. Now, if you take my advice, you're going to be able to slow down the aging process. These are supplements that I take every day. Magnesium and zinc. Take the magnesium and zinc, and it'll boost up your immune system and your brain function. Vitamin C and magnesium will help with your skin, immune system, and brain function. Magnesium is super important for brain function. Very, very important. Omega-3 will help with cardiovascular health. It helps to bring down lipid profile, helps to control the lipid profile. It helps to bring down the LDL levels and increase your HDL levels. Omega-3 will reduce the over stickiness of your red blood cells and help to bring down inflammation. When you do that, you're reducing plaque formation. Turmeric soaks up free radicals and brings down inflammation. Super important for your immune system and cardiovascular health. Myotrol helps with the gene expression to build muscle and reduce atrophy. This is super important if you're 40 years of age or older. Resveratrol. Resveratrol helps with youthful gene expression, soaks up free radicals, helps the health of your mitochondria, and helps to get rid of cells that are in senescence. Resveratrol will help the basal layer of your skin, so your skin will improve its health. It stacks really well with C60. And C60 is a very potent antioxidant. You can get it in MCT coconut oil, avocado oil, extra virgin olive oil. You can get it in a 2-ounce, a 4-ounce, or an 8-ounce configuration. Take a teaspoon a day every day. And what will happen is you'll get your tissues will slow down in the aging process. It's going to soak up those free radicals, bring down that inflammation at the cellular level. Your mitochondria will be improved. And when you do that, you're also improving your neurons. Your neurons will be healthier. By soaking up free radicals at the vascular level, you're reducing plaque formation. And like I said, you can stack it with the resveratrol. The C60 and the resveratrol work really well with the basal layer of your skin. Lignans helps with the immune system and the endocrine system, brings down inflammation and soaks up free radicals. So you can see that there's a pattern here. Bringing down inflammation, soaking up free radicals, boosting up energy levels will help to slow down the aging process. Probiotics, super important to help with your gut biome. You can get it in a powder form or a veggie cap form. And clarity factor. Clarity factor is a great way to help to get rid of that brain fog, to be able to concentrate on tasks. And over time, what will happen is that you'll be thinking faster and have better memory. You'll be improving your positive neuroplasticity. So your dendritic connections will improve and be able to think faster. Drink filtered water, take this every day, super important. Brain function and taking supplements to improve brain function is a major component to slowing down the aging process. You'll notice that with individuals that are in their geriatric years, ones that took care of their brain are doing a lot better versus ones that don't. And that's about lifestyle and proper supplementation. So please go to my store, the-studio-reykjavik.com. All right, so the question is, let's assume that there will be some sort of hyperscaler AI company failure, like OpenAI or Anthropic or Oracle. All right. Now, when you look at the S&P 500 gains, and again, just a reminder, I do a show almost every day. Pay attention to what I'm saying in the market on how to trade it. Now, right now, I have an S&P 500 target of 7,800 to 8,000 for year end. But it's important to understand this dynamic that might happen with AI and the AI bubble. Let's say OpenAI starts to fail, or some of these projects are pulled back and these servers aren't built out. What will happen to NVIDIA? What will happen to Oracle? Now, the Mag 7 are Apple, Microsoft, NVIDIA, Google, and Alphabet. So Google, Alphabet, Amazon, Meta, and Tesla. Okay. Now, the contribution of the Mag 7 in 2023. So the 2023 returns for the S&P 500 were anywhere from 24 to 26%. And Mag 7 contribution was 63% of those gains. So it was a dominant driver. 2026, the return was 23%. The gains for the Mag 7 were 55%. So it was a major driver. But it's starting to decline. That was in 2024. In 2025, the S&P 500 was at 16 to 18%, and Mag 7 was contributed about 42 to 48%. I'm sorry, 42 to 46%. So you're seeing that the contribution of the S&P 500, right? The contribution of the Mag 7 to the S&P 500 is starting to decline. In 2026, it's almost near zero or slightly negative as of this recording. And the S&P 500 is returning anywhere from 8 to 10%. So the Mag 7 is underperforming the rest of the market. at the moment. Now, if you pay attention to the news, this is the reason why you want to watch my show. It's not about what they're saying, but to understand the manufacturing consensus that's taking place in the media. We have been programmed and conditioned to believe that we need AI. Why? Because the open AI and Anthropic model and all of the circular financing is dependent on a demand that really isn't there. So they're trying to manufacture the demand. And they have a business model where it costs so much to do their business relative to the actual revenue stream that's coming in that it's unprofitable. So right now we have an S&P 500 that is doing relatively well, 8 to 10%. You know, you do 7%. If you're doing 7.2% return for every year for 10 years, you're doubling your money. So that's pretty good. You know, it's not double digits. You know, everyone wants the 24%, but a big part of that big push in the S&P 500 was due to the Mag 7. What happens when they start to falter? Okay, so if you run a scenario analysis where if OpenAI starts to default on their debt, starts to not pay the server farm, a failure of an IPO and all this stuff, Oracle defaults on their debt or is having problems, there's going to be a major pullback. And if there's a major pullback, then they won't need to buy chips from NVIDIA. NVIDIA will start to have declining revenues. And all of a sudden, there's going to be a major, and a lot of the circular financing is going to crash. So the direct weight of just NVIDIA is about 8% weight on the S&P 500. So if NVIDIA has a bad quarter, and we define that as weak guidance, missed AI demand, it could trigger a 10 to 20% drop in the stock, NVIDIA stock, maybe even more. So that means that it's going to possibly take down anywhere from 0.7 to 1.6% of the index, if NVIDIA. But that's just on NVIDIA. There's going to be a domino effect that takes place here. And NVIDIA has driven 20 to 30% of the recent S&P returns in strong periods. So there's going to be this tech worry, and all the tech is going to start to sell off. The hyperscalers like Microsoft, Amazon, Google, and Meta, they can contribute 15 to 20%. They fund much of the AI build out. Okay. So if people aren't wanting the AI, they're not, Microsoft and Amazon and all of them are going to start pulling back on the expenditures. Okay, so there are three scenarios here. Mild to moderate. So if NVIDIA has a bad quarter, the mild to moderate drop in the S&P 500, because everything's going to sell, is going to be 10 to 15% drop. Hyperscalers slow guidance, right? So you can see NVIDIA has a bad quarter. All the hyperscalers are going to say, we're lowering CapEx. We're not going to buy as much. Microsoft or whoever says that may, in the short run, be rewarded and people will buy into the stock. But then all of a sudden, there will be a big pull away from tech. So all tech is going to get hit. And because of that, it's going to drive the S&P 500 with it and NASDAQ. Severe case would be 15 to 25% drop. Aggressive cancellations. So let me go back one. Mild to moderate is 10 to 15, and that's when the hyperscalers will slow down their guidance. Plus, Nvidia missed mildly. The semiconductor and hardware industry will sell off 20 to 40%. Multiples compress modestly as AI payoff doubts grow. Okay, so there's going to be this pullback, right? And so CapEx is going to start to go down. A 20% cap step down implies a 10 to 13% index derating via lower growth expectations and rotation to defensives. Now we're starting to notice a little bit of this happening right now, but the S&P 500 is somewhat stable, and it's ticking up to maybe all-time highs again. This is the reason why I said that I'm a little worried about the 8,000 mark for the S&P 500. I'm a little worried about going into 2027 in terms of the S&P 500, and it may behoove you to go 1/3 into cash and wait it out, and then that 2/3 invested, 1/3 in cash, and then see the crash and then buy in. That's one way to play it. Now, in the severe case, we can have a 15 to 25% drop, and it could be, in that case, there's aggressive cancellations, NVIDIA guides sharply lower, demand glut fears. I wouldn't use the term demand glut fears. I mean, it depends on how you write. The bottom line is this, is that NVIDIA will be selling less chips, and what will happen is the demand will start to go down. You have a inventory of chips that you can't sell. NVIDIA is going to have to take some major write-offs. Triggers panic over investments and debt reliance at hyperscalers. All this debt and circular financing starts to be a problem. It could mirror concentrated sell-offs similar to early 2022 tech drawdown or dot-com echoes. Semiconductors could drop 40 to 60% in stress. Now, so you have one scenario, hyperscalers start to slow down, NVIDIA has a bad quarter, 10 to 15% drop in the S&P 500, and they start to pull back on projects. If there's an aggressive pullback on projects, then the market will sell off 15 to 25%. Now, the 30% crash, which is a tail risk, it could spiral into recession fears, credit tightening, broader multiple reset. Extreme models show 20 to 30% tech correction possible. This is just if NVIDIA has a bad quarter. Not Oracle, not OpenAI, just NVIDIA has a bad quarter. Now, what happens if NVIDIA has a bad quarter and something else happens too? It'll accelerate the process and add to the probability of a severe drop. So, mild to moderate, 10 to 15, severe, 15 to 25, crash, 30 plus, drop. Okay. Now, what could mitigate some of this? Rotation, broader market, S&P 493 has already outperformed Mag 7 in 2026. So this rotation has already started to take place. Remember what I was reading on the contributions of the Mag 7 gains to the S&P 500? It was 42 to 46%. In 2025, it's almost zero this year. So the S&P 500, even though it's up, it would be up a lot more if Mag 7 was doing well. but people are rotating out of, people are moving their money into some of these other companies in the S&P 500. So the risk exposure is starting to pull away. So broader market has already outperformed. Okay, so that's, and people are moving in defensives, utilities, good cushion. So there's this AI rotation that's taking place. Not instant collapse would be a mitigating factor. So if it's just a bad quarter, and there's still a little bit of positive outlook in the industry, then it won't sell off as much. And then these full cancellations could take a little bit of time. So it's like a slow moving train. When we have NVIDIA have their poor quarter, or OpenAI starting to show that they can't pay their bills, it'll start this domino effect. And cancellations of projects that haven't broken ground yet, cancellations of leases, and just flat out defaulting on debt is going to start to take hold, and it's going to gain momentum. But to mitigate some of that big sell-off, the cancellations could be slow. It could be a slow-moving train. And then policy or Fed response, potential rate cuts or stimulus if growth fears spike. So if it really brings down the market, you're talking QE to infinity. So that's what's happening with the potentiality with the market. Now, when is that going to happen? It all depends on when OpenAI defaults on their debt, or Oracle, or a bad quarter with NVIDIA. So there's a decent probability that this is going to happen. Now, I think I did a probability study. No, I didn't do a probability study. Thought I did. All right, while I'm looking for that, let me just plug some supplements here. Please go to my store, the-studio-reykjavik.com, and get the vitamin B complex. Vitamin B complex is perfect for you if you're 40 years of age. It'll help to rev up your metabolism, help to protect neurons with vitamin B12. And the first 4 B vitamins in the vitamin B complex will help to boost up your electron transport chain so you have more ATP. Your electron transport chain within your mitochondria produces your ATP, so you'll have more energy. Super important if you're 40 years of age or older. Okay, here's the probability study. The probability of significant AI slowdown triggering a decline in the S&P 500, 20 to 35% in 2026. 40 to 60% in 2027. And 30 to 50% in 2028. So there's a high probability that's going to happen in 2027. And this is the reason why I keep on saying And I know I'm going to scare people when I say this, but there is metaphysics with this that's happening. Things happen on a metaphysical level that affects our reality in this plane. And Rosh Hashanah and the Sabbath coincide this year. And that's a danger because the shofar can't be blown on the Sabbath. And the shofar needs to be blown for Rosh Hashanah to allow for a blessing to happen on the world or on the people or on a person. But if that can't happen, no blessing. Your sins aren't absolved. Satan or Satan has reign. And it happens 2 consecutive years. And whenever this does happen, bad things happen. Let me give you an example. What we went through in the crisis of 2019 and 2020, well, there were 2 consecutive years. So we have to worry about this approaching problem. It starts 9/11, 2026. And this 2 years of not being able to silencing Satan is right in line with the economic potential meltdown of AI. On top of wars in the world like the Middle East, and everyone's saying that we're approaching the time when China invades Taiwan. It's right in those years, the danger years, what I call the danger years. So we're seeing economic hardship. We're seeing a meltdown of AI, world catastrophe. Our bodies are not as physically fit because of the crisis we went through in 2020. The dumbification of people, the cost of living, this El Nino affecting food crops, the war in the Middle East affecting the availability of fertilizer. All these things are emerging at the same time. It's very scary. 2027 has a 40 to 60% chance of a market crash. All right. With that, I'm going to play some videos here. Before I do, please go to my store, the-studio-reykjavik.com, and get the Manuka honey and the orange splash. These are made from structural nanosilver. Use them during the cold season, the allergy season, or if you're cleaning around the house. Have a few bags of this at your household. You never know when you need them. Very high quality, and it'll help to neutralize the allergen, or use them during the cold season to neutralize. So please go to my store, the-studio-reykjavik.com, and get the structural nanosilver lozenges. And digestive enzyme complex. Digestive enzyme complex helps to reduce the load on your pancreas as you are digesting. Now, digestive enzyme complex will help to break up carbohydrates, proteins, and lipids, and allow you to absorb those nutrients. And it's really important, especially if you're 40 years of age or older, to reduce that load on your pancreas. Now, digestive enzyme complex also has bromelain, so it'll help to break up proteins, but bromelain also helps to break up clots. And this has the proteolytic enzymes to break up glycoproteins. Super important during the cold season. This is the reason why I said you should be taking the digestive enzyme complex during the crisis of 2020. And oh, by the way, it worked really well. So please go to my store, the-studio-reykjavik.com, and get the digestive enzyme complex. If you're 40 years of age or older, you need to take care of your pancreas. So reduce the sugar content in your diet and make sure you take the digestive enzyme complex. All right. I want to play some videos that I think really hit home on what I've been saying for 2 years. I said, a crisis is coming. It's an economic crisis. It's a physiological crisis. It's a crisis of domestic policy and governance, geopolitical crisis. It's all coming to a head here.
Thanks for joining us here. So, we don't really know at this point in time, right, what the actual financial picture of these companies look like.
Well,
they wouldn't be the first with bad financial profiles to go public.
well, they'd be the first to be this bad, other than WeWork, and even then, this is so much worse than that. OpenAI burned $20.9 billion in 2025. That's their audited financials that the FT&I reported. And the problem with these companies is their margins are getting worse, and their costs increase linearly with their revenues. There is no proof that they can improve their margins, no amount of specialist silicon or supposed Vera Rubins will bring these costs down. And we're at a point now where OpenAI is now potentially pushing their IPO to 2027 because they could get a $1 trillion valuation. It's clear that people are wising up to the problem of generative AI.
Think about this.
It's not really
Think about it. Revenue for OpenAI, 13 billion. Loss, 38 billion. They can't make money. The business model doesn't make sense. There's not enough demand willing to pay for it, the tokens, and the cost for the compute is too high.
So that was something that was discussed yesterday on Squawk Box. The comments from Alex Clark, the Palantir CEO, making the rounds. I think we have a clip teed up. Take a listen.
The general way these things were sold, and these people are, Sam and Dario, there's nothing more fun than debating Dario in private. So I'm not throwing shade at them, but something has gone completely wrong. And the basic view among enterprises in this country is I'm going to chillax and waste my time with tokens. I'm going to get no value, and they're going to get my IP.
Yeah, so he was being sarcastic there. This idea that enterprises are balking at this idea that they're going to be paying all this for tokens. They're not going to be able to control the data usage and how the data is used, and they're not able to really measure ROI. What do you make of those comments?
I mean, I agree with him, but he's right. These companies, Anthropic and OpenAI, they encourage waste. He actually said that these companies don't charge on outcomes, they don't charge on success because you can't with large language models. They're inherently hallucination prone, as proven by OpenAI themselves. And so they encourage waste. They want you to spend a lot of money, and then they try and pilfer your ideas. Anthropic already tried it with Claude Design with Figma, and I believe they had a relationship with the company, and Dylan Field even said he was shocked by it.
Think about what OpenAI is about. Think about it. And they're already, it's the bad news. Yesterday, OpenAI is being sued by Apple for trying to steal trade secrets. So you have debt problems with OpenAI, revenue issues, lawsuits. They can't do their IPO. They canceled it because there wasn't enough individuals interested in buying it. There's a big problem coming here. Big problem. But it's beyond that. This idea that the tech out there in Silicon Valley, I noticed it. It's all about fake it until you make it. These people, they create these companies that they are not profitable. They create this allure and they try to do this manufactured consensus and everyone buys into it. And then if they're lucky, they become profitable, but many of them don't, and investors get crushed. Now, there are a lot of people that are just recovering from Lehman and the COVID years, and guess what? We can't have another meltdown. People cannot afford another meltdown for a bunch of billionaires and trillionaires to fleece the average citizen. So people need to pay attention to this. Now, we have ways now that we didn't have during Lehman to be able to short the hell out of these stocks. and you make money, and people like Nvidia or Anthropic will suffer. All right, so you need to start thinking like a vigilante, a market vigilante, or a bond vigilante, or a Nvidia vigilante, and make money by shorting the hell out of these people. All right, so because you don't want to be a victim, because they're trying to sell you a bill of goods that just doesn't exist, and they don't have good ideas. So what they have is that they're trying to be this big cipher of, well, you just use our model and our commandeered compute, and you'll have a great idea for a business, and then all of a sudden we'll be able to see behind the scenes what you're doing and try to replicate it, try to modify it a little bit, and then we'll create a whole business suite so you can buy a license off of stuff that you invented. Sam Altman is a fucking asshole.
See it as well is their copies of these companies are not particularly good. They don't make great software. You'll notice that both Anthropic CEO Dario Amodei and Sam Altman have both said, we can't wait to see what you build with this. Well, that's because they don't know what you can build with this. They want everyone else to do their innovation for them, spend as much as they can on tokens, and then take whatever's left. Except they lose too much money for that strategy to actually work.
So then what do you think should happen? Do you believe that these are companies that should be nationalized? As we read in the intro, there's discussions reportedly that the administration and potentially some sort of sovereign wealth fund would take a 5% stake in OpenAI. I mean, is that a situation that you would like to see happen, or do you think that's more disruptive?
No, I don't think there's any need to. They talk about, I think Sam Altman said, well, we can share the benefits of AI and the profits of AI. What profits? What returns? That 5% will have to get congressional approval. The sovereign wealth fund is still an idea at this point. But fundamentally, large language models are not the future. The only reason big tech is investing in this is that they've run out of hypergrowth ideas. They don't have a next iPhone. They don't have a new Google search. So they've put over $1 trillion with trillions more to come into a kind of a dead-end industry, because when that ends, they'll have to admit that they don't have anything else.
So you think AI, LLMs overall is a dead end? You see no business model here. You see no utility from AI whatsoever.
I see this as in the future as a boring hardware-based business, the kind of the Oracle licensing hardware model. I think this is a $10 to $30 billion TAM industry, pretending to be $1 trillion one, and because everyone's propping it up.
Now think about it. Think about that. $10 to $30 billion industry, but yet it's costing $1 trillion to build out. It's going to take forever to pay it off. It's not sustainable. The cost to run the models are much too high. This is not a sanguine situation here. Now, think about what's the size of the actual software industry. The size of the software industry is probably, I don't know, like maybe we should. My guess is less than $1 trillion, right? All of the software out there, the software industry. Now he's probably lowballing $10 to $30 billion of annual revenue with this whole LLM subscription model concept. I would put it into maybe closer to, instead of 10 to 30, maybe 30 to 50. But it's still not sustainable. It doesn't justify the valuations that are happening. It's not that big. It's the same problem with SpaceX. The total estimated market is much lower than what SpaceX is suggesting. I mean, it's just, but SpaceX is a little different because it's the Elon Musk factor, and a lot of people, it's a meme kind of stock, and you know, there's other behavioral dynamics. But the question is how big is the software industry? Now, if we do a little bit of research here, just in revenues, real revenues, not multiples of revenues, not the market cap. Okay. The global software industry is currently ranging at 1.2 to 1.4 trillion. In 2025, it was 1.25 trillion. And in 2026, it's projected to be at 1.4 to 1.44 trillion. Now, that's the total software industry. And LLMs and building processes off of them, according to Ed here, Zitron, or Zitron, is saying 10 to 30 billion. So you're talking about a small software company, actually, or maybe not small, maybe mid-sized. But the point here is this is only a drop in the bucket of what the actual size of the software industry is. Something's not right here. Something's not right. Something's going to crash here.
Hypergrowth ideas, and we're just kind of pretending it's the kayfabe of the tech industry. Really, it's run out of ideas.
It's funny you mentioned Oracle because people were quoting the annual yesterday. Quote, some of our customers, OpenAI, may be highly leveraged. We may experience risks of non-payment in our dealings with such parties. Are we going to see this from a market standpoint first in shares of hyperscalers?
I think we might, but Oracle is a particularly scary one because they are building 7.1 gigawatts of capacity just for one customer. And they even said in their annual report that the risk was they might not get paid. OpenAI only loses money. And I think I estimate it's like $75 billion of revenue annually that they will have to pay for the full Stargate data center project in annual compute revenue. OpenAI can't afford that. And if they can't, Larry Ellison can't afford to pay back those bills.
See, OpenAI starts to fail because the revenue stream is poor. And Oracle fails too. And there's going to be a big pullback and a severe decline in the S&P 500 of 25%, 25 to 30%. That's what's going to happen. And there's a 40 to 60% chance of it happening in 2027. If we want to get to the brass tacks of what this really means and get out of the weeds of hyperscalers and the number of watts of whatever, 2027 has a very high probability of a severe decline in the S&P 500. 40 to 60% chance. And what's going to light this fuse is OpenAI failing, paying their debt, paying their servers, because if they can't get financing, it all crashes. They can't do an IPO, so they can't get equity financing. And we're already seeing signs that debt financing with these Mag 7 and hyperscalers, the tap is getting closed. The money isn't flowing through. It's July 2026. We'll probably make it to a record S&P 500 and it's going to crash in 2027. I highly recommend not to panic yet, but I highly recommend you pay attention to the S&P 500, get to that 7,800 to 8,000 level, and then 1/3 of your money needs to be in cash and wait it out. Now, if you want to be really risk-taking, short the fuck out of NVIDIA and Oracle.
Oracle stock will be in jeopardy along with the margin loans that Mr. Ellison holds. It's genuinely dangerous, and it's dangerous across the board for neoclouds, for hyperscalers, for every associated party of the LLM industry.
Is Oracle the tip of the spear on that, or is it something else?
I think it could be the neoclouds, because with this rumor of Meta selling their AI capacity, I think companies like Core, even especially Nebius and Iran, and Cypher Mining and all of them, TerraWolf as well, they're basically outgrowths and they're subsidiaries of NVIDIA. NVIDIA is now, well, according to the information, going to be paying them to rent back their GPUs when they install them in the data center. This is something that only happens in an industry without diverse and real demand.
Meta is an interesting case in this instance because they don't as yet have the third-party cloud services revenue popping it up. But people point to their own top line having accelerated in the first quarter of this year from like 23% to 33%, presumably because they're implementing these AI tools or somehow making the platform more productive along those lines. And at the same time, it shows you the fallback option. We're creating all this capacity, even if it's not a business model, the capacity is there. We've gotten the kind of the power and the compute in place. Maybe that helps society down the road.
Well, the thing is with Meta is I don't necessarily agree. AI is not driving Meta's revenue growth. The fact that they have an effective monopoly in social media is. Microsoft, Google, and Meta and Amazon are all doing a funny little, I don't want to call it a scam, but it's a trick where because the other businesses are still growing, but they never disclose their AI revenues, everyone conflates that with AI driving their growth. In reality, their other businesses are growing and AI is losing them money across the board. You'll notice that neither Microsoft or Amazon, who both share their run rate of AI.
Now, think about this. Think about what he's saying. Some people are saying, well, the market's going up because businesses are becoming more productive. Right? Remember what I said. Mag 7 doesn't contribute right now to the actual uptick in the S&P 500. Actually, it's a little bit of a downdraft. It's a little bit negative effect. So we're trading at about 8 to 10% return on the S&P 500. It would have been higher if Mag 7 was doing well, but they're not because institutional investors are pulling out. They're they see this because they understand the debt issue here. They're pulling out. So the exposure is less. And companies that have real business models, doing, selling pizzas or whatever their business is, but they have real revenue and controlled expenses are driving the S&P up. But then you have these people on these business channels saying, well, the S&P 500 is up 8 to 10% because of AI is driving businesses. Bullshit. Meta's normal growth, X AI, is what's helping them right now. Any investment in AI is a hindrance. Now, what is interesting with Uber, because they are an AI company, they're trying to move towards autonomous vehicles and they need that AI computation. The question is, will individuals really buy into autonomous vehicles? Okay, maybe for Uber, maybe. Let's just say everybody that uses Uber will now use an autonomous vehicle that Uber controls. That we've passed that scare factor and people do it. You have those Uber drivers on the gig economy that are going to lose out. So that's going to hurt the economy. But not everyone uses Uber. And people still need to drive cars. And vehicle autonomy is decades away in the use of, in terms of someone going to GM to purchase a vehicle and their vehicle is going to be autonomous. We're decades away from that. So the point that I'm making here is that the actual growth of the economy right now, which is healthy, is because of real growth, not fake growth, not this AI growth. We had in the S&P 500, it grew with fakery for the last 2 years, in 2025 and 2024. But in 2026, things are starting to normalize. But when things start to fail because of the circular financing, it's going to drag down the whole economy. And the probability is 40 to 60% in 2027 for a severe decline 25% to 30% of the S&P 500.
Will share the actual AI revenues. That tells you that these companies are afraid. Public companies love good news. If they had good news, why wouldn't they share it? That's because they've only got bad news here.
So what do you think then is the straw that ultimately breaks the camel's back? You've got trillions potentially at stake in terms of just overall CapEx investing through the years. I mean, it seems like there is a collective desire for this to work. What ultimately provides the challenge or presents the challenge in your mind that kind of reverses all of that?
So I heard a Goldman analyst say recently that the first hyperscaler to pull CapEx will get rewarded by the markets. I think that CapEx pullbacks they're the sign. I also think any financing falling through for OpenAI or Anthropic would be a sign, but I think we're going to start seeing AI companies kind of start falling out of favor and not being able to raise money. But the big thing is debt. When data center debt stops being issued, that will be when it's bedtime for this industry. Yeah. Because even if they think AI is going to win, we've got 100 gigawatts.
That's right. And many economists say that the party ends, the bubble bursts once the debt can't be financed. It all blows up once the debt can't be financed. And the banks are going to start looking at what's happening, and they're going to say, no more money for OpenAI, no more money for Anthropic, no more money for deals making servers. It's all going to collapse.
Center capacity allegedly under construction or in planning. That's trillions of dollars of money that needs to come from somewhere. And we are tapping out the debt markets. We saw that with Google raising that $85 billion equity raise.
Although you'd agree that spreads do not imply that moment is anytime soon.
Spreads have been wrong before. That's the thing. And I think that perhaps the timing isn't going to be immediate, but at some point, a hyperscaler is going to pull back CapEx. And when that happens, well, this is an industry of followers. The tech industry doesn't have ideas. They just copy each other. Everyone copied Satya Nadella when he put ChatGPT in Bing. And I think that whoever breaks CapEx first, they'll follow them too.
All right. Ed, thank you very much.
Thank you.
Ed the Trump.
All right. I want to play another video that I thought was really interesting here. But before I do, please go to my store, the-studio-reykjavik.com, and get the Goodnight Formula. Goodnight Formula helps you to get into 3 to 4 to 5 cycles of REM sleep or deep sleep. By doing that, you're going to be detoxifying your central nervous system, consolidating memory, which is super important for brain function. And you'll be well rested. It has tryptophan, melatonin, GABA, and passion flower to allow you to get those cycles of sleep to help with brain function. Good sleep will slow down the aging process. Vitamin D3, super important for your cardiovascular health, your immune system, bone density. You should be taking it every day. The ashwagandha root helps to control cortisol levels and blood glucose levels, helps the cardiovascular health and brain function. Please go to my store, the-studio-reykjavik.com, and get the great supplements that I offer. Use discount 5 and you get $5 off. All right, I want to play this video. I think it was excellent to understand the compute build out is way in excess. And the individuals that are optimistic about this industry, I don't think are really paying attention to this upside down business model. It costs more to run the business than the actual revenues. And the servers are obsolete in 2 to 3 years. So when these companies fail, there's no use case. What do you use it for? All this money is flushed down the toilet. Stupid, absolutely stupid. But a bunch of billionaires out there from California thought they knew better. And they thought that they would be able to use the business models out there, the business schools and the business media to kind of pump this all out. I see so many artificial intelligence companies popping up with these new grads coming from Harvard. They're setting up these small companies. All the business models suck. It's all like, you don't need this. First, mankind doesn't need it. And secondly, it's very marginal gain if you implement it. And even if you build it out, it's a feature, not a company. During the app age, a lot of people were building companies off of a feature. Larry Ellison was talking about this. Is that a lot of these companies that were popping up in the early days of the .com era, they were like features. They weren't like real companies. Oh, we have a cart. We figured out how to do e-commerce, and we have a cart. That's not business. That's a feature. It's really important to pay attention to this.
No way to read this other than Meta at home, they built too much compute capacity and now they're selling it. I think what we're going to see now is kind of the H-bomber guy thing of sell the compute to who? Aquaman? Meta is flat out of reasons to have this capacity. They said on that annual shareholders meeting, they thought they had a reason. They thought they had a reason to have all this compute capacity, but they might sell it if they don't. And I guess they don't. I'm not sure how else to read this. This is very bad for the AI bubble. This is exactly what I feared, which is that these companies bought way more capacity than they could ever need.
Welcome to Property Markets. I'm Ed Elson. It is July 2nd, and let's check in on yesterday's market vitals. The Dow was roughly flat to start the third quarter. Meanwhile, chip stocks dragged the Nasdaq and the S&P 500 into the red. Brent crude dropped as the US signaled talks with Iran were productive, and the yield on 10-year treasuries rose after Fed Chair Walsh said inflation was, quote, too high. Okay, what else is happening? The cloud computing industry has just gained an unexpected new arrival. Meta is reportedly planning a cloud business to sell its excess AI capacity. The company has poured billions into its AI infrastructure, and until now, Meta has maintained that all of those investments and the resulting compute capacity would be used for internal purposes. But clearly now, something has changed. Meta stock closed up nearly 9% on the news, but other neo-cloud compute providers such as CoreWeave dropped on this news. So, for more on why Meta is getting into the compute game and what it means for the rest of the AI industry, we are joined again.
Now, I personally think that what's happening with Meta is that they need revenue. They've been noticing that they're plateaued out. People are canceling their Facebook account or just not using it. So their ad revenue is faltering because of it. And then they're coming out with all these glasses where because people aren't using Facebook anymore, the glasses will be plugged into their, system, and they are analyzing you so they can sell your data to an advertiser. So buy those glasses so you can help Zuckerberg make billions. It's so obnoxious. So that he's invested quite a bit on that. And he has all this server space now that he doesn't really need because their AI business model is failing. And so this is the beginnings of the sign that there's an overbuild out of compute. But he's trying to get revenue. The key point I'm making is that people aren't using Facebook as much. So he's trying to get people to use these glasses. And he's also trying to marginally get a little bit more revenue with servers that are just sitting there idle. It's like a machine shop where you have a bunch of machines and you can process work. And so you go to companies that need certain parts made, but they don't have machines to make them, but they need parts. So you sell time on those machines. You sell at $40 an hour or whatever. That's kind of where this business model is going. It's like a bunch of machine shops that are sitting idle looking for work.
Of the Where's Your Ed At newsletter and host of the Better Offline podcast. Ed, good to see you. I'll just start with the good news on my end, because for those of the listeners who follow me on social media, I actually bought Meta last week and it's up 10% since then. So technically I'm happy because my view was that the price was pretty cheap relative to the rest of tech and relative to the S&P. That's the good news. Bad news potentially is we thought that Meta was going to build their own AI products. Now they're saying, no, we're going to sell the compute to someone else, for someone else to build their AI products. And that's why I wanted to talk to you, because it doesn't seem like a great signal for the AI industry. And you've been all over this. So your reactions to this message?
Well, I think it's a sign that Meta is walking away from its AI play. It's Baron Borowski over at the Wall Street Journal made this point earlier. Meta was meant to have an API for its Muse Spark AI model weeks ago. Just hasn't happened. And now we've got these rumors of Meta allegedly selling off its compute capacity. There's no other way to read this other than Meta has they built too much compute capacity and now they're selling it. I think what we're going to see now is kind of the H-bomber guy thing of sell the compute to who? Aquaman at some point? Because who are the people that are buying this compute? Meta is I think the second or third largest buyer of AI compute. They have a $17 billion contract with Nebius, a $22.4 billion contract with CoreWeave. I'm not sure how this works. And the bulls are already trying to frame this as, oh, this is Meta. Intelligently, they're monetizing their AI stack. When what it actually is Meta is flat out of reasons to have this capacity. They said on that annual shareholders meeting, they thought they had a reason. They used the word think. They thought they had a reason to have all this compute capacity, but they might sell it if they don't. And I guess they don't. And I'm not sure how else to read this. This is very bad for the AI bubble. This is exactly what I feared, which is that these companies bought way more capacity than they could ever need.
Yeah. Well, just to go back to the quote from Mark Zuckerberg, this is from May. He said, quote, when asked, about whether he would do what he's doing now, which is sell the compute, he said, quote, we haven't done that yet because we think we have a use for the compute. But obviously, if we get to a point where we feel that we have overbuilt, then that is an option that we have. And that is partially what gives us confidence in investing in building this out. So this seems to be the answer to that point, which is we did overbuild, thinking that we were going to use all of the compute to build our own stuff. But now we're kind of admitting defeat and saying, no, we're just going to sell the compute to someone else for someone else to build the stuff. To be fair to the bulls and explaining why the stock is up right now, I think Wall Street was concerned that they were building this stuff and they had no plan to monetize whatsoever. Why are you building all these data centers? Why are you building up all this compute? They've come out with an answer now. It's just not a great answer. It's probably...
You start seeing blood in the street, you either want to start shorting the S&P 500. There's a lot of ways to do this. Once you start seeing blood in the street and there's this big downturn, most likely in 2027, you may want to take a look at the 1/3 cash that you put on hand to short the S&P 500. But keep the 2/3 that are in the S&P 500. And the money that you make from that, then you roll into buying, dollar cost averaging, buying into the S&P. So you have 2/3 in the S&P 500. It takes a hit, a 20, 30% hit. You have 1/3 in cash. When the market's starting to go down, when the bad news comes out, it's not yet, but just wait, it will happen. You're shorting the market. You use a 2x leverage short S&P 500 ETF. You make money on that. And then you roll that amount plus the corpus of the 1/3 into the 2/3 that are remaining in the S&P 500 and your dollar cost averaging, and then it'll mean revert up. And you will make money. Now, another way to do it is to take that 1/3 in cash and short NVIDIA. There are ETFs that can short NVIDIA. And there's also ETFs where you can short the actual tech industry. That might be another one too. Now, the way I'm going to play it is probably short NVIDIA, short the S&P 500, and maybe even short tech, the tech ETFs, and then roll that in to the S&P 500 and long it.
Easiest answer you could come up with.
This event that's going to take place, if the 40-60% chance comes to fruition of a 25% decline in the S&P 500, you can get a very good return if you do what I just said and not be a victim of the system. There are many people that were victims of the system during the dot-com days, during Lehman, but with social media, people are a little bit more focused on managing their money, tactical moves versus passive moves. Being able to short certain positions. The whole ETF market is much more built out now than it was back in the Lehman days. Don't be a victim. There were so many people in the United States that were victims. And these people that set up this industry on false promises, you just burn them to the stake.
To the question of who is going to monetize this stuff? Because if Meta had all those engineers and they had all of the resources, and they are deciding, no, we're not going to monetize AI ourselves with a front-end product, who's going to do it? Will it be OpenAI? Will it be Anthropic? I mean, what do you think?
Well, I said on Twitter a few weeks ago, you know that we're at the end when Anthropic buys compute from Meta. I think that if we see a deal signed with OpenAI or Meta or Anthropic and Meta, we're at the end. They're out of ideas. Because right now, there are no large buyers of compute other than OpenAI and Anthropic. Meta was the other one. This whole time I've been saying, wow, Meta has no AI story. Meta doesn't really have a use for this compute. Turns out that Meta has no use for this compute because they don't have an AI story. So this will be actually an interesting demonstration of how much actual compute demand there is. Because Meta, I don't imagine uses much of it. And they have a large amount. They have almost as much capacity as, I think, Microsoft. They were one of the largest buyers of H100s and H200s at the beginning. They're building that vast Harvardian data center, which PIMCO owns most of the bonds of, which is interesting. It's great to hear where our retirement funds are going. But it's weird, though. I thought that they needed all this compute. I thought it was very important they had this compute. And it just makes me wonder whether they ever had a strategy. Right. If people want to say, oh, their strategy failed, I don't think they had one. I think that they just bought all the compute because that's all Mark Zuckerberg can do. He sees someone else do something and he goes, I'm going to do that. And now he's becoming what? A really big, boring cloud infrastructure provider? I mean, it's also the question of how much money they'll make of this, because I've seen some fanciful projections, some truly ludicrous ones of people saying they'll get $20 billion a gigawatt. That has no precedent. Because Oracle, which is building Stargate Abilene, the 1.2 gigawatt, these 880 megawatts of critical IT for OpenAI, they're only expecting to make about $10 billion a year from that once it's fully built. So, okay, let's say that Meta gets lucky and makes $15 billion a year from their capacity. All right? I mean, for how long? Who can afford that? Because really the answer is OpenAI and Anthropic. No one else is buying that much. I think Jane Street is getting 100, 200 megawatts maybe, but who are the other large buyers? Because there certainly isn't an aggregate of gigawatts of capacity demand. And this is the larger point I've been making about the build-out, which is that the demand does not exist at scale, and the largest consumers are two bulbous failed sons that only lose billions of dollars. And I don't know.
Here, this is perfect. The way he's saying this is perfect. Most of the compute that's being used are by 2 or 3 big corporations. And their AI business model is failing. And the smaller customers don't come anywhere near to the need of that type of level of computation. Now, what might happen is when this all blows up, compute becomes so cheap that the end smaller customers use it more often because the tokens are inexpensive. If tokenization is inexpensive, then it'll take off in corporate America. But that's the reason why the internet took off, because it was relatively free. Once you had a broadband connection that you paid, Comcast or whoever your provider was, the internet was free for you. Now you could, pay for a subscription for something that is behind a paywall, but that was a different story. But the internet, the flow, was free. Having AI computing for you needs to be inexpensive, or corporations aren't going to use it.
I'm seeing people try and rationalize this. I must warn them that this is a very, very bearish sign.
Yeah, I think that's exactly right. And I mean, going back
He's
to
picking
the
up.
parallels to
He's picking up. Ed is picking up on something that I've been saying for 2 years. Something bad is happening. Now, I'm looking at this at the 50,000 foot level. Because of the coinciding of Rosh Hashanah and the Sabbath, for 2 consecutive years, bad things happen. And it's going to start this year, September 11th, 2026. And it's going to last for 2 years. So it's going to go through October 2027, October 2028. And that's going to be geopolitical. It's going to be economic. It will deal with health, your physical health. The environment's going to change. Food supplies will change. These are major things that are coming here. And people at the individual bucket level, they're picking up on this. I've been picking up on the big picture here. And now you zoom in and you can start seeing our health is affected by the crisis that we had, and there's going to be another pulse that happens, because as antibodies start to wane, there's going to be another pulse at about the 10-year mark. Well, the 10-year mark, depending on when you took it, that you're talking about 2030, 2029, right? So there's something bad is coming here. And as it starts to wane, people start to have problems with their system. Food shortage, changes of the climate because of El Nino, when some areas are too wet. So crop yields could go down. Some areas are too dry. Crop yields can go down. Now, in some regions, crop yields may go up. But in the aggregate, crop yields are probably going to be stressed. So all these things are happening at once. And supposedly we have a good economy. But you ask the average person, they can't afford anything. So you have inflation as another problem. And to bail this out, to bail the economy, you're going to have fiscal stimulus, so more debt, more inflation, and you're going to have the Federal Reserve lowering rates and pumping in more money, more inflation. So it's going to be even worse. It's crazy.
bubble. I mean, the trouble that we keep running into is we keep hearing that there's all of this demand for compute, there's all of this demand for chips, which there is, which is why the prices of this stuff are going up. But when you go to the demand for the AI products on the front end from the consumer perspective, or from a B2B perspective, yes, they're technically spending money on this thing, but not nearly enough compared to the losses that we have seen and you've reported on from Anthropic and from OpenAI. And so it does certainly seem that this is an admission of that point. I mean, you really think that if someone was going to figure out how to make AI an extremely profitable consumer product or business-to-business product, Meta would be that company. But they have decided with this move, it seems, that they can't figure it out. And we'll see what happens. We'll see if they maybe go back on this. This is kind of initial reporting. Just going to that phrase, though, excess compute. That's a crazy phrase to hear. And that was exactly what was written in the article, that there is excess compute, and that's why they're making this move. I mean, what do we know about compute supply? I thought that there was no excess. I thought that we were completely constrained.
So based on my analysis across all of these companies, I would say 80% of all AI compute is owned by or used by OpenAI or Anthropic, with the rest of it being Meta. They have those multi-billion-dollar deals. I actually thought they are also doing 1.2 gigawatts with Crusoe. Just slipped my mind there. So what's happening is it's a mirage demand. What it is two large companies are taking up an absolute crap ton. They're buying anything they can get, leaving scraps for the rest of us. Well, not me, but you know what I mean. So these companies taking up all this space. So of course the success compute. Meta isn't using it. I don't even think Microsoft is using all of their compute. I don't think anything that's being, like Google recently also said, or it's reported that Google couldn't give Meta all of the access they needed for Gemini. And because of capacity constraints, and people were saying, well, that's a bullish sign because it shows the demand. No, it's Anthropic. It's all Anthropic. Anthropic is just rapacious in their demands for compute. So the excess compute is whatever is left over, the dregs that are left over from Anthropic and OpenAI. So I think that the moment there are large bumps of compute that enter the market, such as Meta leasing, it really comes down to how much they lease. If it's 10% or 30%, maybe. If they do more than 50%, this is just going to flood the market. Because aggregate customers, I've really looked. I've done a lot of analyses on this. I've looked. I can't find companies providing inference or people paying for AI compute in anything more than tens or maybe $100 million a year in spend. The demand is not there. And that was before we got to this weird thing where, everyone's cutting back. There's the UBS study that said 60% of organizations are token minimizing. They're limiting their token spend. We're not in a supply constraint situation. It's that just two companies are taking it all up. And if Meta dumps this onto the market, oh boy, we'll finally get to see whether we're truly in a supply chain crisis. It's really just having two oaks taking it all up.
Yeah. Just thinking about how this might end if it is true that the ROI or that the business model doesn't work. This has been your contention. That's what you've been saying for a long time. I mean, I just think about how it would play out and who would get hurt. Clearly, if you're spending hundreds of billions of dollars on CapEx to build out the data centers, and it turns out that the ROI isn't as large as we thought down the chain, then that's going to hurt for you, but you might figure out a way to monetize those data centers eventually. That's sort of the question. The companies for whom this will really hurt, clearly in my view, it's the companies that are offering the AI product whose job is to do the difficult task of figuring out how to make more money than they spend on the AI and who have not proven their business models yet, and that would be OpenAI and Anthropic. And if those are the only two companies that are essentially buying up all of that compute, when you've done your analyses and tried to figure out who's buying this stuff, and it's just those two, it seems that those are the ones who get hurt at the end of the day in a very significant way. Would that be your view?
I mean, everyone gets hurt. I think it's all of the construction firms. I think the construction firms underlying the data center. So I think there are going to be just a bunch of data centers that get built and never get used, which will be hellish for the private credit funds, which are backed by people's pensions and insurance annuities. I think it could open AI.
And think about what was happening in the last 6 to 12 months. The FTC is stating that you no longer have to report every quarter. So you're not going to be able to see this in the business data until after the fact. So the Trump administration is trying to hide this crap. You have companies asking for a bailout from the government by being a part of a sovereign wealth fund. And you have a big push for ETFs in private credit and private equity. So they're trying to shift the risk to the average person. They're shifting the risk to other investors, shifting the risk to the government, trying to hide what's going to be happening. What does that sound like? Shifting the risk. Privatizing the gains, shifting the risk. Socializing the risks. That's like Lehman. There's a little bit of a Lehman and there's a little bit of a almost Enron with the circular financing crap that's going on with a business model that is not working. Revenues are lower than expenses. There's no chance of ever finding a large customer base to be able to justify the build out of these data centers. Harvard Business School is going to be doing business cases on this. It's a little bit like Enron with the circular finance, but with Enron, they were doing special vehicle entities, SVEs. They weren't even real businesses. They were just moving money. These are real businesses, just not profitable, and nor will they be profitable. So it's a little bit like Enron with the circular financing. And there's this element of socializing risks. Well, that's like Lehman. Oh, just shift it. See, what's his name? Both of them are Ed. Both of their names are Ed. So Ed on the left, he is like, well, it's only going to affect Anthropic and OpenAI, these types of companies. Maybe Meta, maybe NVIDIA. But the rest of the economy will be okay. No, we're all tied at the hip here. It's going to take the whole market down. There's going to be a 40 to 70% chance, or 40 to 60% chance of a severe decline in the S&P 500 of 25%. And that's going to happen. That could happen in 2027. A 40 to 60% chance. It's going to take down everybody. Don't think that there's not systemic risk here.
Anthropic will be able to find the compute they need, but then they will run out of money, and then that will leave all of this compute sitting fallow. I think that this still hurts Meta, because look, if Meta drops all this compute onto the market and they can't sell it, that's also bad. Yeah. That means that Meta has got a bunch of compute it can't use, and will, depending on how bad things are, actually have to take an impairment if they don't think they're going to be able to use all that compute. They're not going to be able to monetize it. Meta is actually in a position to mothball much more of this, because they can just claim, oh yeah, we're working on ad models. It's just ads, just doing some ads on the back end. No one's ever going to find out. It will get bad for the Microsofts and Googles of the world. And I think that the apocalyptic conditions that there will be, if I'm right, will be quite severe. I think we're going to see a lot of incomplete data centers. I think we're going to see data centers that just cannot pay. They'll be assumed by lenders. And if that happens at scale, it's going to affect anyone who's invested in this. It's going to affect the Japanese stock market because of SMBC, Sumitomo Bank, two of the largest banks in Japan, who are heavily levered in the data centers. I think the spread of this will be hellish, but it's going to kill the neo clouds. Yes. I'm so tired of people on Twitter being like, oh, Nebius and Iron, they're so good. No, they're all invested in by NVIDIA. They're all backstopped by NVIDIA. Yeah. And their customers are Microsoft for OpenAI, Anthropic, and Meta. Yeah. So it's just, I don't think people realize how bad it is.
There's not enough small businesses needing the compute. It's that simple. Now, when there's mass destruction in this industry, if the server farms stay in business, they will have to lower their prices so low that maybe companies like OpenAI and Anthropic, where they're not trillion-dollar companies, there may be $100 million companies. And they have a revenue structure that allows for a 30% margin compared to their costs. But it's just not there. It doesn't even come close. There has to be mass destruction of this industry. It's gonna be pretty.
Right. I'm not even saying that this is not a bit. This is just, if the demand is not there, there is allegedly over 100 gigawatts of compute capacity under construction.
Yeah.
If we can only sell 6 gigawatts, if there's only demand for 6, and that demand is mostly coming from 2 unprofitable companies that pretty much only make money because of a hype cycle and also subsidizing a lot of their products, what does that look like in the future? It looks like a disaster. And unlike the dot-com bubble, there is no useful infrastructure here. AI GPUs do not have other monetizable use cases anywhere near even a fraction of what's being promised of AI.
Final question for you before I let you go. Some news has occurred since I last had you, specifically OpenAI reportedly delaying their IPO. I have a tinfoil hat theory that the reason they did that is because of you, specifically the financials that you leaked on OpenAI and kind of the shitstorm that caused. Reactions to OpenAI apparently not going to go public in 2026 anymore.
Rat-a-tat-tat. That's what happens when people see your stinky numbers. I'm serious. My tinfoil hat theory is that OpenAI's numbers in their S1 differed from mine. I don't mean fraudulently, just to be clear. They just presented them in a different gap variant, or they just didn't show all of them. I also think that just there was a very large, loud discussion of the numbers. I don't know. I imagine because the whole reason that they delayed per the Times that they say was their advisors wanted to get $1 trillion valuation and they couldn't. That's very bad because
Right, exactly.
they lost valuation.
What it is that they created a company and they think, and they created a company, they've invested in it, and their take on this must be at a certain amount. And they're not looking at what's the real value of the corporation. They're just throwing a number out there and saying, that's what we want. And not looking at what's the real value. The real value is actually negative.
Money was 750 something billion, I think, something around there.
Yeah,
So
you think you just
like
one little step. Yeah.
Like a 30% premium. That shouldn't be a huge ask unless, of course, bankers looked at this and said, mate, that's not worth 700 or even 500 billion, which kind of lines up with something. From a few weeks ago, SoftBank tried to get a margin loan in which they used all of their OpenAI shares, which on paper are worth over $100 billion, as collateral, a $6 billion loan, and the banks would not give it to them. That probably suggests that banks might have some issues.
Now think about it. If OpenAI is 13 billion in revenue, let's just say 10 times revenue. Well, that's only 130 billion. It doesn't even come close to a trillion. Or even if you give it 20 times. See the point? It doesn't even come close to $1 trillion company.
Good thumb. And people will say, well, Anthropic will be fine. Anthropic is exactly the same kind of business. They run in the same way. Oh, they use the enterprise more. Everyone's on the enterprise now, even OpenAI. So my reaction here is, I don't think the future is going to be better for these companies to list at. And I think that this is, I don't know if OpenAI ever goes public now. Maybe they will. Maybe they slop this thing out there. Maybe they find a weird way in. But I don't know. If they want $1 trillion, it's very clear that valuation isn't realistic, at least at this point in time.
Well, it's a shame because I was looking forward to seeing those financials. That was going to be my Super Bowl.
Well,
And eventually when it
that's
happens,
one.
yeah, that's one. When it happens, you and I will have to do some live stream or something and react in real time, but we'll have to wait. If it ever happens, we'll see. Ed Zittrain is the author of the Where's Your Ed At newsletter and host of the Better Offline podcast. Ed, appreciate your time. Thank you.
Thanks for having me.
Please go to my store, the-studio-reykjavik.com. Get the zeolite. This will help to detoxify your body. It'll bind to heavy metals, toxins, and chemicals. It'll allow you to urinate those out within 6 to 8 hours. Take it every day. And it's a great way to improve the immune system and your endocrine system. You can also detox through taking the gladiator barley or the heirloom barley. Gladiator barley will help to build muscle, detoxify your body, soak up free radicals, and bring down inflammation. And when you do that, you're helping your immune system and your endocrine system, brain function. You'll be able to recover after a workout. Heirloom barley is very similar to the gladiator barley, except it doesn't focus on building muscle. It just focuses on the detoxification, bringing down inflammation, soaking up free radicals. And again, that's really important to help slow down the aging process. So please go to my store and get the barley or get the zeolite, or you can stack them. Please go to my store, the-studio-reykjavik.com. All right. Let's go to this Apple and OpenAI lawsuit.
I needed 10 sequin cowboy hats for a bachelorette party. But what did I get? What the? But then everything was just resolved. Return label in my email. Order tracked. Thanks to nice AI agents.
What hours in the day? Ed Ludlow, host of Bloomberg Tech, joins us now here in New York for more on the two giants relationship souring. This is kind of a window into what you've talked so much about, this war for talent in Silicon Valley right now, centering on AI.
Yeah.
Just to mention those names, Tan, Johnny Ive, legends kind of Apple's hardware operation, have been brought over to OpenAI to work on new products there. What does this story say about that broader fight that's taking place?
Well, I mean, this is a big story, and I would say probably actually as much about Silicon Valley's look to the future of hardware as much as it is the people. You know, if you think about the landscape of Apple and Meta as examples, trying to work out how people, consumers, use AI through different device form factors. The smartphone is what we mostly use, but glasses are coming in. People have tried pins. That's kind of the underlying layer of the story, which is interesting. But in terms of Apple versus OpenAI, the sort of full economic and litigating might of Apple against OpenAI, it's very serious.
You just referenced it, but what does this mean for OpenAI when it comes to trying to expand into hardware and when it comes to actually making money from people using AI, which is a bit of a...
Yeah, I mean, in the suit, Apple describes OpenAI's hardware effort as nascent, but you gave the key details, which is that Apple claims there are about 400 Apple alumni now working at OpenAI, and the specifics which OpenAI executives coached those hires, as the suit alleges, on how to sort of leave Apple smoothly with, as the suit alleges, documents, etc. We don't know much about the form factor or where OpenAI is at with its device progress, but the backstory is very much bigger than that. A couple of years ago, the company started working together on software for the iPhone, integrating OpenAI's AI technology in Siri. Then Johnny Ive struck up a relationship with Apple and with OpenAI, and it's kind of soured from there. The net result, well, we don't know.
Yeah, there's kind of with friends like you who needs friends quality to all of this. But what is the status of the kind of business relationship or partnership between these two companies?
Well, I mean, now Apple wants to go to trial with the jury trial.
Fair enough.
Right? And, it's worth pointing out that, well, what is it that Apple wants to achieve through this suit. They want OpenAI to stop what they're alleging they're doing, which is misuse of trade secrets. But more than that, the suit requests that OpenAI start again, re-engineer any hardware that Apple believes has their own technology in it. But basically, it has been souring, I think is the phrase you said. That's right, and it's probably kind. There was a middle ground or a middle stop between Apple's developer conference 2 years ago, where Sam Altman was there, and Apple executives were calling OpenAI the leader in the field, and they started this work on the software side, to OpenAI being very frustrated with Apple because they felt that Apple wasn't moving on the things that initial agreement had put in place. I want to point out one piece of reporting that is important. Apple had made an attempt to get OpenAI to change this behavior outside of court and basically cease and desist. And clearly that was some months ago and that didn't work. So now we await next steps. So that's what Apple wants to do.
But it's so interesting to me because this is, it solidifies kind of the environment in Silicon Valley, right? But this is nothing new. Like you can think back to like GE competitors doing this, and any big successful company, I feel like this always happens. You're the trendsetter, you're the gold standard, and then people.
OpenAI is not profitable. And they need a device that they may be able to sell the device and have a subscription to the device to get some revenues. And Ives is a perfect fit to create a form that people would buy that would bring AI to the everyday agent level. So you're walking around, right? And Apple is positioned the best in any company to merge that software, hardware component than OpenAI. And what's happening here is OpenAI is trying to get what is Apple really developing in-house so we can get to market and compete. It's very similar to the stealing of the operating system, where Microsoft stole the operating system from Apple. So Apple is a little concerned about this because there's a historical precedence. Also, Google stole information about what was going on with devices like the iPad and the iPhone. So I think Apple should sue. And OpenAI needs to fail. It needs to fail.
That didn't start their own things, or they poach from there because that's where it started. Like, what is the threshold for what they have to prove? Well, they have to prove that they've actually stolen documents.
Yes,
okay.
It is very common for talented people to go from one Silicon Valley technology company to another, so long as they are acting within the confines of the law. And Apple speaks to this in the suit. They basically accuse OpenAI of coaching these people to avoid the dreaded walkout. So when you give your notice, everyone wants that 2-week period where you stay in post and not get walked off the premises. But as a part of that, Apple's allegation is that OpenAI encouraged those hires from Apple to use the window to access documentation, specifically though about unreleased products and non-disclosed technology at Apple. That's the underlying point here.
Let me make what I hope will be an elegant segue here. You're talking about the ventures these companies are embarking on a new hardware related to AI, and you're here in New York because sent out the chairman of the SK Group.
Yes.
Within that organization, there's SK Hynix, which makes these memory chips. Crucially important as we look at kind of where AI is going, where AI-related hardware is going as well. So you sat down with the chairman of that company yesterday. What did he say about the prospects for that company in this field? What's it going to mean for the production of chips broadly, for memory chips in particular going forward as we see this expansion?
Yeah, this was the biggest US first-time share sale by a foreign company. So they have their own shares in Korea, common shares that are listed and sold, and now they have American depository receipts. One ADR represents 1/10 of one Korean share. but it set records. They raised money for a reason. They need to build more capacity for memory chips that go into consumer electronics, like Apple makes with the iPhone, but more critically in the AI age, high bandwidth memory, which is lots of layers of DRAM memory into data centers. And the biggest takeaway for me from that is, despite their best efforts and being on the hook for hundreds of billions of dollars, they say their supply may never catch up with the growing demand.
That's crazy to me. Here's also, the companies are talking about how it's kind of cyclical demand, which also was confusing to me because I feel like, well, that's what I mean. Like right now, it seems like there is just demand.
So historically, memory chips are boom and bust. When there is great demand for consumer electronics, the memory chip companies ramp up capacity and people tend to have stockpiles. Then when consumer electronics demand falls away because of an economic cycle or it's just not in vogue, sometimes those memory chip makers have been, oh no, now what do we do with all these big factories we've built and no one wants any memory chips? So they try to avoid that. Is the AI era different where the data center demand for memory is sort of more linear and keeps going? And they would say, yes, it is.
A fascinating moment when he brought up the concept of memory as a service. So we think of memory as a commodity of these chips, and you teased a bit out of him in that regard. Later on, I was filling in for Ed on the show yesterday in Bloomberg Tech yesterday.
Thank you.
Professor, thank you. No, you're welcome.
All right, you need to be here for this.
At UCLA, he was really pioneering memory work. He said, this is the next frontier. Explain what it is and sort of how that stands to change the way that we think about the compute that goes into AI.
Honestly, I don't know. He kind of did it of his own volition. But, you know, in the world of AI, when you think about AI workloads, so not training AI models, but running them, inference, you don't sort of necessarily as an everyday consumer or even a software company, any company that's using AI say, okay, I better go out and buy myself lots of chips to run this AI stuff. You rent cloud computing capacity from Amazon or Microsoft, Google, etc. And I think what he was basically saying is, instead of us selling the memory chips, kind of avoiding that boom and bust cycle, why don't we just rent out the memory capacity? Now, I think there's a lot of questions about how that would work in practice. And, you know, I tried to say to him, how would that work in practice? It's been really interesting because the Korean press has really picked this up and run with it. You know, it's an interesting idea, potentially higher margin. We don't know, but, you know, that is the direction that computing is going in, and that's exciting.
Yeah.
And we also have some sound from your interview because the chairman said he had big plans for the US. So.
Yes.
The SK already investing at more than $35 billion in the US side. My plan is at a much bigger number. So
bigger than 30.
Much bigger than 35.
So much bigger than. So much bigger than 35 billion.
Much.
What is he teeing up?
Yeah, I right now, again, SK, they have 60% market share basically in high bandwidth memory, these data center memory chips we've been talking about. In Korea, they've committed hundreds of billions of US dollars to expand their domestic capacity, Here in the US, across SK Group, to date, 35 billion. So they raised $26.5 billion selling US listed shares. Kind of seems like nothing in the grand scheme of things. But this is where the customers are, right? NVIDIA is the biggest driver of HBM adoption. For every one NVIDIA GPU, there are 8 corresponding HBM chips. So if NVIDIA is going up like that, it's logical that so would SK. So they know that's a part of it. They need to have capacity here to serve the data center build out in the United States. He just didn't give me a dollar figure. Imagine if he had.
Yeah.
You know, we sent a red headline on the Bloomberg Tunnel with that because it's a very important political thing as well, right? This nation and this administration has been very proactive in getting outside capital to commit to building things here in America.
Kind of a minute left. So you say that they have the largest share of high bandwidth memory production. There's Micron, there's Samsung as well. We had Howard Lutnick, the Commerce Secretary, talking about his desire for Samsung, SK Hynix to do more here in the US. How resonant is that? And when you listened, and you asked about politics explicitly, his relationship with the Trump administration, what's your read on kind of the resonance of calls like that from the Trump administration to do more here in the US with a company like SK Hynix?
Yeah, and if you expand it beyond memory, TSMC as well. You know, the world is highly dependent on Taiwan for the production of the latest chips on the logic side, GPUs, compute. That is a security risk, many would say. So there's a great willingness to invest in America. The president been a good deal maker, but the debate that exists is, would they ever, Samsung, TSMC, bring their latest and greatest to America prior to bringing it to Korea or Taiwan? That seems unlikely. So you're waiting for the great American champion to crack the technology side. But yeah, that is the direction of travel.
And we've only got about 30 seconds left
Sure.
before we have to send you on your way back home. So what other stories should we watch on your beat? What are you looking at coming up?
Earnings, technology company earnings, and all the American public needs to know this weekend is how much money did they spend on AI, and now how much money comes out the other side. Like, what's the net result of all of this spending? This quarter seems like that will be more in focus.
And we'll have more resolution on, as we approach 2027, what the probability of this AI correction will be. Now, like I said, at this moment in time, there's a 40 to 60% chance of a 25 to 30% S&P 500 decline in 2027 because of the AI bubble. There's a 15 to 20% decline. What was the probability for mild decline? Mild decline right? The mild decline would be 10 to 15%. A severe decline would be 15 to 25, and a tail risk would be 30% plus crash. And there's a 20 to 35% chance of it happening this year, 40 to 60% chance happening in 2027, and in 2028, a 30 to 50% chance. So next year is going to be a problem. And it's going to be triggered by a decline in NVIDIA. So pay attention to NVIDIA. Okay, I want to play a little bit of this new AI model that's coming from Zuckerberg. What? You know, if he doesn't need the compute and he's coming up with an AI model, you know, will people actually use it? Probably not. So it's another boondoggle. Please go to my store, the-studio-reykjavik.com. Get the collagen. Collagen will help with your skin, hair, and nails. Also help with your musculature, bone density, and joint health. Super important to take every day. And if you want to improve your dermal layer for your skin, take it also with the vitamin C, with the magnesium supplement. Drink filtered water. I have Boomer Boost. Boomer Boost has 68 nutrients. It has the minerals and the vitamins that you need to slow down the aging process. But it has a lot of other compounds in here that will help boost up that immune system and endocrine system, help with the cardiovascular system, help with brain function, help with musculature, rev up your metabolism, help to control A1C levels, control your energy levels and have a steady burn of energy. You're going to have more vitality. And like I said, if you take this regularly, you're going to be able to see the slowing down of aging. You're going to see that your musculature, will improve, your BMI will improve, your brain function will improve. So please go to my store and get the Boomer Boost. And I also have structural nano silver toothpaste with no fluoride. Get a few tubes for your household. It'll whiten your teeth, freshen your breath, reduce inflammation at the gum line, improve your gum health, and it neutralizes because it has structural nano silver. Super important to take every day, but especially during the cold season. Get a few tubes of this toothpaste for your household. Please go to my store, the-studio-reykjavik.com.
CEO Mark Zuckerberg told Bloomberg News that Spark 1.1 includes a new paid tier for developers. Well, let's get more on this now with Bloomberg's Kurt Wagner, who spoke with Zuckerberg. Kurt, give us some of the finer details. What did Mark tell you?
Yeah, I mean, this is a model that is an updated MuseSpark. MuseSpark was already out. This is MuseSpark 1.1 is mentioned. But I think the big thing here is that for the very first time, they're going to, sell access to this model to businesses and developers. They have that API that we've sort of been waiting for, that a lot of the other AI companies already offer. And so this is
People are using Facebook less often. They're concerned about revenues. They're coming out with all these products to make sure you're plugged into their company so they can sell ads or data about you to advertisers. And here's another revenue stream. Zuckerberg has wasted so much money of Facebook. It's amazing. The shareholders should just throw them out.
direct revenue stream for them. And, one of the things that we spent a lot of time talking about when I chatted with Zuckerberg was the pricing and the fact that he really wants to go cheap on the pricing. One, because he thinks the competitors are too expensive. Two, because he's trying to get this model into as many hands as possible. And the cheaper he does that, the cheaper he makes it, the more likely that is to happen. So this is very much a classic meta strategy, make things as cheap as possible for as much distribution as possible.
So on one hand, they have this new way of generating revenue with this AI model. And Kurt, you and the team also learning earlier in the month that they're also now setting up a cloud business too to sell AI compute. How much of this is just trying to escape this trap that Meta is in, with its shares now into a bear market about can you get a return on investment that all the spending and CapEx that Meta is currently undergoing?
I think this has been the biggest concern from investors over certainly the last 6 months is, hey, you're spending aggressively, you're making these big commitments, you're doing the things on paper that AI companies should be doing. But what is the plan to make all that back? And so that was a real concern a few months ago when they reported first quarter earnings. Since then, we've seen them come out with a consumer subscription for their AI chatbot. They're charging for AI agents. They're building, setting the framework internally for a potential cloud enterprise business. Maybe they're even going to sell some of the compute that they've accumulated. So they're really, setting up all of these various businesses around AI that didn't exist just 2, 3, 4 months ago. And if you're an investor, you have to be saying at the very least, okay, we know where the company plans to get some of that investment back, which was not necessarily as clear at the beginning of the year.
Yeah, it didn't seem like the likes of Zuckerberg ever cared that much about where shares were trading, but Meta has really had a terrible run, you have to say, Kurt. What did he say about that?
Well, he essentially asked him about morale at the company and said, look, you did these big layoffs, a lot of internal restructuring with AI, and he kind of just chalked it up to times of change. There is going to be disruption when you have a technology as big, powerful, and influential as AI sort of come into the mix. And they are using AI in a way that they weren't 6 months ago. Their engineers are using it to build products and app features. They're obviously trying to adjust the human side of the business to match the technological side of the business. So you kind of just chalk that up to, hey, this is what happens in times of disruption. But I do think it's hard to ignore not only the stock price, but what that does to morale inside the company. We've certainly seen reports and heard rumblings from employees that things are not great there. But a strong business and a good stock price usually fixes a lot of that stuff.
Well, it wasn't really that long ago, Kurt, just quickly here that Meta was paying top dollar for AI engineers. How is the race and the competition for talent currently unfolding?
I think that it's still going to be competitive. We see people jumping from, OpenAI to Anthropic to Meta to Google. Like we see this sort of musical chairs of AI talent. I do think they're more settled than they were. Obviously, last year they were building this new lab essentially from scratch. So they had to go out and spend aggressively on all these people. They have the leadership in place with Alexander Wang there. So I don't think they're doing quite as much of that as they were. But I think there's always going to be a bit of a musical chairs with the talent, just because it is so unique and the people with those skill sets are so in demand still. So I don't think we're seeing quite the eye-popping prices we saw last summer, but I think there's still a lot of interest there if you have that skill set.
All right, next video.
OpenAI
Anthropic are essentially looking to build medieval fortresses with huge walls. They say, come into our fortress and you'll be safe here. To the Goldman Sachs of this world and the JP Morgans, etc.
All right, let's listen into. There are two types of economies, AI and everything else.
Trying to figure out to me, it's two economies, right? The AI driven data center compute build out economy and the rest of the economy. And that's been firing on all cylinders, right? The data centers, compute just being built everywhere. Prices are able to be, ramped up and companies are accepting it. I think you saw some of the first cracks last Thursday when, for the first time, Zuckerberg said Meta might actually sell some excess compute. And we went from a world where the only mistake you could make is not having enough compute to maybe being able to sell it. To me, that's the real question here is, we know the next 6 months, year are all looking good on this. But will people start questioning where they want to be 2 years from now? That to me is the biggest risk to the market, is some change in compute. And it is kind of funny though, you point that out. And some of these compute kind of companies have already sold out very hard. So some of that is getting priced from the market, but I think there's more risk, and I don't see how the rest of the market of the economy does well if the compute starts fading. That compute spending is such a huge driver.
So, Peter, we're going to come into, as Jess mentioned, kind of the earnings season here. Boy, the first quarter earnings were so good, and that arguably was what's been driving this market all year. What are your expectations for the second quarter?
One, I think because we just went through such a quarter where everything was so good, people looked at it. And it's funny, you just talked about the idiosyncratic risk, right? What I did notice is the earnings were so driven by a handful of companies, right? If you look at the index level earnings, they're awesome. But strip away those companies, the rest did not look as good. So again, I think it's going to be harder to win through the earnings game. I think people are becoming, a little bit, hey, we're back at, record valuations. We need to see this. It was 2 weeks ago, the one company, I believe it was Micron, did give clear indication that they have orders locked in for years to come. I think that's what's going to be need to be done, right? It's not just this quarter's earnings. It's really going to be, what have you sold next year? What are you selling 2 years from now? And how certain are you that those sales are coming through? And again, it's going to be very driven by compute, I think.
And toward the end of the month, as we were talking, not only the Federal Reserve decision, but it comes the same week as a lot of those big tech earnings as well, and the hyperscalers. What are you expecting to hear from them when it comes to that AI spending and CapEx? And how do you think markets could potentially react, to your point, when you're looking ahead to the future here?
I think we expect, and it's built in, that all is, going well, sales are on pace, that there's no slowdown in the need for compute. So I think anything that kind of, puts a doubt in there will have a disproportionate effect. And that's where I do think market structure has been very helpful to this industry on the way up. I keep looking at SOXL, so it's the triple leverage stocks ETF, it's 20 some odd billion. That has been amplifying the moves in both directions. And I think it amplifies them mostly on the way up, but it will amplify on the way down if we get any cracks. And you start looking at this. I'm having a lot of conversations with hedge funds. You get news that looks like it should be a 0.5% to 1% move day, and it becomes a 2 to 3%. And I think that's a lot to do with market structure. So I think right now we're probably a little bit more susceptible to the downside, though it would still help on the upside. And all of this, I think, when we're going to start getting inflation data, I think Warsh is going to be able to say, hey, inflation's coming down under me. I think he did a phenomenal job of addressing inflation. I really think we're going to see deflation, inflation decline. Everything that's going on in oil is generally helpful to that. But also, I think he's going to start discussing some of these other metrics like trueflation, Zillow rents, things that actually don't say inflation's above 2%. I think that's going to be the key to his success and why I think the market's really mispricing. Everything's thinking he's hawkish and we're going to get hikes. I think he's still dovish. He just needs the excuse of inflation, and how he looks at inflation is going to give him that excuse to be dovish again soon. Probably not this meeting, but soon.
Please go to my store, the-studio-reykjavik.com, and get the Renew or the tube form of structural nanosilver gel. Use either one the same way. You can use it as a topical, daily topical. You can put it on a cut. It'll help to heal the cut quicker. You can use it to mitigate the cold season and the allergy season. Lightly coat your nostrils. It stays active for 5.5 hours, and it helps to neutralize because that's structural nanosilver. So get the Renew or the structural nanosilver tube version. Make sure you use discount 5 and you get $5 off. And I have Max 35, Max 14, and Cleanse. Max 35 is at 35 parts per million. Cleanse is at 30 parts per million. Max 14's at 14 parts per million. They're at different price points, but you take them the same way. And what they do is boost up your innate immune system. Take a teaspoon of this a day, swish it in your mouth, gargle about 20 seconds, and then swallow. What this will do is neutralize and improve your oral cavity, improve your oral pharynx, maintain your mucosal barrier, and help the health of your epithelial cells. This will boost up your innate immune system. And when you have a better innate immune system, you're not getting as sick as often. You can do this to fight the cold season and also the allergy season. It'll help to neutralize allergens. So please go to my store, the-studio-reykjavik.com, and then get the Max 35 Cleanse or Max 14 and boost up that innate immune system. I've been doing this protocol for over 6 years every day, teaspoon a day, every day. Please go to my store, the-studio-reykjavik.com. All right, we're going to play one more video. It's dealing with the CEO of Palantir Carp, and he's talking about AI.
Now exclusively at the table, Alex Karp, Palantir's co-founder and CEO, and CNBC's Seema Modi, who covers Palantir, joins us and tell us about the deal with NVIDIA. There's so many things I think we all want to talk about, but let's get to the NVIDIA deal first.
Because I have so much respect for NVIDIA and Jensen Huang, I'm going to try to keep it more adult than I usually do. But the truth is, if you want to know how this came together from my perspective, there's a lot of technical issues. Who controls the models? Who controls the weights? Who controls the value of your business? We're sitting on critical infrastructure across America, Ukraine, Israel. Everyone who uses LLMs on the battlefield runs on top of our oncology. And our clients are just, to say they're unhappy with the Frontier Labs is to say I'm welcome at the Berkeley faculty. It's like, there's just a level of discomfort and loss of trust that also made it really.
Okay, unpack that. What do you mean by that?
Well, so when you're using large language models, at this point, everyone technical realizes they're like a critical resource. To make them valuable in an enterprise like battlefield context or regulated context or manufacturing, you have to have what's called an application layer. And we have this thing called ontology that now everyone's copying. But de facto, it takes a large language model. It makes it safe and useful and precise. So safe because it doesn't touch your unlearning data, safe because it prevents the large language model from caching your data and replicating your business, safe because it doesn't transfer your IP of how to fight secret data, top secret data, or in a clinical context. So the general way these things were sold, and again, these people are, Sam and Dario, there's nothing more fun than debating Dario in private. So I'm not throwing shade at them, but something has gone completely wrong. And the basic view among enterprises in this country is I'm going to chillax and waste my time with tokens. I'm going to get no value, and they're going to get my IP.
Now that sounds like shade.
Okay.
Oh, and not just shade, it sounds like you're saying these.
No, sorry. This is reporting.
Okay.
And this is reporting that I've literally, against my own interest, called. These are like, I'm profiting from this, right? So the reality is, you may not like us at my former school, Harvard or Berkeley, but enterprises in this country trust and love us, especially ones that are involved in critical infrastructure, both public and private. Okay, so I want for those countries, we're coming up to July 4th. I want for us and our friends across the globe to have the very best tech resources. In fact, the whole secret of Palantir is the forward deployed model, the products that have been 5 years ahead. You've been with me for a long time. Everyone said FDEs were services. They said we don't even know what an ontology is. That's the only thing people talk about now. The secret was we delivered the best things for the warfighters. Those warfighters have serious trust issues, but it's not just the work vis-a-vis Frontier Labs. Then you have my enterprises in the private sector who have the same issues. Like, why would they get access to my data if they're going to build my alpha? Why wouldn't I control the weight? And that's when we get this partnership. What aligns me with NVIDIA, and I think is what the technical customers want, which is control over their compute, their models, their data stack, and their alpha. They want to know they own the means of production. It's not being transferred to someone else. They're not interested in some fake deploy code that somehow is deploying tokens that transfers the alpha to a third party. And the jig is up. And so we have to figure out a way, our products are agnostic. We now sell a product to customers that allows you to switch from model to model and we're completely agnostic. But we need to rebuild trust. And that trust is going to happen where everyone gets to ask and answer basic questions. Who owns the data? Where is it cached? Are the prompts secure? Is this being transferred to you? Are you being okay? If it was so valuable, let's say I can make you $1 billion right tomorrow. Wouldn't I say I'll make you $1 billion and I want 30%? Why are they charging for tokens if it's so valuable?
So then, Alex, if the key, from what I'm hearing you say, is a secure, American-born, open-source model, how quickly can your model compete with the frontier AI?
Well, no, what I'm saying is
agentic AI.
Okay. What I am claiming, obviously slightly true, but slightly self-centered, is it's the model plus an application layer plus compute. It is really all three. So in our jargon, it's the value, the reason, just look at our financials. The reason why everyone is chillaxing with bad financials and growth with losing money is the client refuses to pay the true cost. The two places that actually make money, like profit, free cash flow, are our application layer called ontology and compute. Okay, what I am not just claiming, we can take an open model and in the classified or non-classified context, get it to the point of a frontier model. But you control the weights. So what is the true cost? Not just what you're paying. The true cost is what you make minus what you lose, meaning the value of your business. But we can get the frontier application to be exactly the same as a frontier model without the risk of transferring the alpha of your business to another. By the way, you could do this with a frontier closed model too, but then the clients have to be able to ask and answer very basic questions. Are you keeping the data? Are you going to enter our business? What do you in the classified context? When the Department of War goes to you and says, "I need this application," do they get to control the weights to do it, or do you get to control the weights? Are we really going to outsource the battlefield of this country to the consensus view in Silicon Valley? That is effing insane. Yeah. And by the way, every single enterprise in this country, in private, a lot of them don't want to speak in public because it gets outsourced to the neurodivergent crazy person that apparently is on drugs. The one thing I don't do. Okay, so that's my role. But I'm telling you, in this country, at every single enterprise I deal with, these people are livid. They're like, I am paying for tokens that create no value. These people are stealing the weights and alpha of my business, and they're creating a wealth tax that does not help the poor. It just punishes, starts with the billionaires. Every single person at this table is going to be paying a wealth tax only to punish us. And the reason for it is because these models have been completely irresponsibly oversold. And the sell is, it's dangerous for everyone, which is why I can give it to all your adversaries, but I can't give it to the Department of War, or I can't safely give it to an enterprise in this country without being certain that the alpha of that business could transfer to this model tomorrow, i.e. I have no business, no job.
You sound pretty angry.
No, this is the voice of American business that is being channeled through me. And I'm telling you, it is absolutely a problem for this country because we are on the cutting edge of every single AI technology. But if you're going to triply oversell something, and by the way, the enterprises are just tired of it. But by the way, just a minute. I want everybody watching this to test what I'm saying, especially investors who think somehow this is working.
Electricity is the biggest energy theme in the 21st century.
We really are entering a new age.
You need to balance supply and demand.
So that's my take on the AI infrastructure, what potentially could happen with the S&P 500 this year and next year. I'm concerned about 2027. There's a 40 to 60% chance of a decline. And that decline could be as bad as a 25 to 30% decline of the S&P 500. And it could be triggered by the failure of OpenAI or NVIDIA. And so pay attention to the news, pay attention to NVIDIA's investor meetings, what they release for their financials, pay attention to what's going on with OpenAI and their affordability. Can they pay their debt? But the dominoes potentially could start falling this year. But I don't think that the actual hit in the S&P 500 will happen until next year. I still have a long-term target of 7,800 for the S&P 500 to maybe 8,000, but I'm very concerned beyond that. We'll continue to be talking about this subject matter on a daily basis, but there seems to be problems with the overbuild out. And this desire by OpenAI to be $1 trillion company, yet they don't even have revenues that come even close to that. And the circular financing that's taking place within the industry. It's a little bit like Enron. It's a little bit like Lehman. So when this thing all blows up, there's going to be a major business case that HBS, Harvard Business School, will be doing on what went wrong. Please go to my store, the-studio-reykjavik.com. Thank you for listening and have a nice day.